All right, PepsiCo is moving higher today despite the company revealing a Q3 miss on revenue and earnings this morning before the bell. Joining us now to help us break down PepsiCo's quarter is Citi US Beverages, Household Products, and Personal Care lead analyst Filippo Falorni. Filippo, it is good to see you. So PepsiCo reports, stocks popping here about 2%. Walk us through the report. What did you make of it?
Hey, Josh. Thanks for having me on. Look, the quarter was a bit softer than expected. Their organic sales metric, which is a widely looked metric in consumer staples, was up 1.3%. Expectations were more in the 3% range. So a bit of a softer quarter. The weakness was really in the North America business, both in the snacking and the Quaker food business. And then a little bit of softening in some international markets like China, Middle East, even Latin America. Also, Pepsi lowered their full year guidance on organic sales. They were previously expecting approximately 4%. They're now expecting a low single digit, more in the 2% range. But despite that, they also reiterated their EPS guidance. So they talked about increased productivity. So there's not really a lot of risk to the bottom line. And that, I think, given the sentiment was already pretty negative into the print, that's what drove the positive reaction today.
Hey, Filippo, I'm curious what this tells us about how the rest of the sector might do, right? Both beverages, but also snacking. If they're sort of seeing weak top line here, what does that tell us about competitors?
Yes, Julie, that's a really good question. I mean, look, clearly the consumer is feeling more depression after really 3 years of very high inflation in consumer product goods. And now you're starting to see, especially the low-income consumer, really have more value-seeking behaviors. So one theme that we've seen throughout last earnings season, and I think is going to be very evident in the Q3 earnings season, is that many of these companies are going to talk about more promotional activity. So giving back value to the consumer. Clearly, CPI has cooled off. Now, a lot of the focus, both from retailers, but also more government pressure to lower consumer prices of many of these products. So I think most of these companies, what they're talking about, the first step is going to be increased promotional activity, focus more on giving value with larger pack sizes, and ultimately, in some cases, you might have to see some price reduction for certain categories.
Filippo, I'm just curious, if you're an investor in names like this, not near term, but longer term, how concerned, if at all, should you be about GLP-1s and their impact on just names like this, but also throughout your coverage universe?
Yeah, look, that's been a focus for investors, especially last year. There was a lot of focus as many of these drugs were starting to take traction. It obviously comes up in a lot of investor conversations. We've done a deep dive analysis of GLP-1 and the potential impact. And really, when you think about the penetration in terms of use of these drugs across the US, it's still pretty limited. And even combining some pretty rosy forecasts of the increasing penetration over the next 5 years, the impact on volumes, we're talking about less than a point, more like in the 0.5 to 0.6%. So really, there is a little bit of impact, but I think the main reason of the weakness that you're seeing in volumes for many categories, including salty snacks, is more the amount of pricing that was taken over the last 3 years and a need to reset prices with promotions or with value packs back to the consumer to really re-stimulate demand in many categories.
And speaking about pricing, I'm also curious about the sort of pricing to sizing ratios here. In other words, what people call shrinkflation. Are we seeing Pepsi and competitors do that? And how do the economics look for them on that front?
Yeah, that is a very important topic. I know there's a lot more political attention to shrinkflation. I know Congress is clearly making it a focus to push back on these companies to give value back to the consumer. And Pepsi talked about it today on the earnings call. So historically, many of these companies have used smaller pack size as a way of driving positive mix. So instead of selling you a large pack of chips, I'm selling you a smaller pack. And the price per individual chip, price per unit, is actually a lot higher on the smaller packs. So you get better price mix realization. But now a lot of the focus, both from the government, both from retailers as well as the companies, is now to give back value to consumers. So Pepsi today talked about giving more value in the form of larger pack or, for example, bigger multi-packs with more smaller pack within the multi-pack as a way of, again, giving back value to the consumer after significant price increases over the last 3 years.
And Filippo, I'm curious, how is geopolitical tensions, how is that impacting Pepsi and kind of rippling through the other names you cover?
Yeah, look, geopolitical tensions are clearly rising around the world. The Middle East has been a pressure point for many companies. There's anti-American brand sentiment in many countries in the Middle East. Pepsi talked about it today on the earnings call. Coca-Cola has had about a 1-point volume impact, negative impact from the Middle East over the last couple of quarters. Procter & Gamble talked about it as well for brands very recognizable like Pampers. So there's clearly some pressure for multinational companies in the region. China also remains a little bit of a pressure point. The environment is pretty soft. There's a lot of hope for the stimulus, but as you guys talked about, the numbers there are a little bit lower than expected, and so this is probably going to take a little bit longer to improve. So there are pockets of the world where really the consumer is softer, and there's a little bit of anti-American brand sentiment that is impacting these multinational companies.
Filippo, great to have you on the show today. Thanks so much for joining us.
Thanks for having me.